Hello, and welcome to episode 2 in our podcast miniseries, Engineering the SMB Capital Stack, sponsored by our friends at Fundbox. One of the most difficult problems in small business lending is one that seems deceptively simple: customer acquisition. There are a lot of small businesses out there, more than 36 million in the US alone, and they don't all hang out in the same places, which makes marketing to them extremely difficult. Which advertising channels do you choose? And which distribution partners do you focus on recruiting? When you find them, what do you offer them? Even though capital is a need that unites all small businesses broadly speaking, the specific types of capital solutions that small businesses need vary greatly by sector. Highly seasonal businesses will need very different forms of capital than steady state businesses. And size. Sole proprietorships need very different financing than a medium sized business with hundreds of employees and a complex balance sheet. Embedded lending, putting financing in the places where small business owners and operators already are, isn't a silver bullet for these challenges, but it is a meaningful improvement on the status quo, which is why it's been growing so quickly. No one understands this dynamic better than our guest for today's episode, Tanay Jaeel, head of product for Stripe Capital. As you will hear in Prashant and I's conversation with Tanay, the differences between direct small business lending and embedded small business, of which Stripe currently offers, are profound. They tell us a lot about how the SMB capital stack has changed and how it will continue to change moving forward. I had a tremendous amount of fun in this conversation, as you will hear, and I can't wait for you to dive into the details and learn from Prashant and Tanay. So without further ado, here's episode 2 of Engineering the SMB Capital Stack. Okay, Tanay, thank you so much for joining us.
Thank you so much for having me. It's great to see you both.
Tanay, we've been looking forward to this conversation. And of course, folks know that you're the head of product for Stripe Capital. And I think now it's been about a little over 5 years that Stripe Capital has been in the market. I remember an announcement somewhere circa 2019, very early. And I think you've been at Stripe now for almost 5 years, and a large or all of the journey has been on Stripe Capital. So you've been with Stripe Capital for for much of its life.
Yeah.
It'll be really helpful for us to just get an inside peek into what was it like to be part of that journey, and where did you start? And you've come a long way. Just sharing a little bit about some of the milestones that you've sort of accomplished or hit as you've grown.
Yeah, totally. As you said, it's been a super fun journey indeed. I've been at Stripe for almost 4.5 years now, and with Capital the entire time. Maybe a good place to start is just, why did Stripe even get started with Capital? It actually goes back to a survey we ran where we spoke to a bunch of small businesses on Stripe and asked them, hey, what is your number one barrier to growth? Like, what's the thing that if it was kind of removed as an obstacle from you, you feel like you'd grow a lot faster? And actually the number one answer in that survey was access to capital. And it was just, as we dug into the stories and we talked to small businesses, especially about how, it can be hard to know where to start, going through and kind of following the traditional lending process can be really onerous. It may result in a rejection. We just kind of arrived at the conclusion of, hey, maybe there's like a win-win ecosystem here where, small businesses can get access to, necessary financing, and Stripe can also really just deepen its relationship with these businesses and also build, kind of real revenue line along the way. So that was kind of like the starting part. And it's been just an awesome ride since then. I guess a couple of milestones that stand out to your question. I think the first one was probably the hey, I think we're onto something even at scale sort of moment, where we started to see, exciting signs of merchant adoption, people really kind of jumping in and taking access to their Stripe Capital offers, really solid signs of customer satisfaction when they were actually, taking out a loan, paying it down. They felt like the experience was fast, it was frictionless, and great signs of merchant retention. I think we shared that something like 80% of merchants who pay down a loan with Stripe Capital will choose to do it again when they have the chance. And on top of that, of course, this is very important in lending. We saw that we were able to do this, as a profitable portfolio where we were able to drive losses lower than expectations. So I'd say the first milestone was that kind of like, hey, I think we're really onto something. I think the second one was really when we decided to extend our offering from just businesses who come directly to Stripe and to a Stripe dashboard to kind of an embedded model, working hand in hand with a lot of the vertical SaaS platforms that are on Stripe. And this is what we now call Stripe Capital for Platforms, and really kind of extending the audience for that. And then maybe the third one is kind of a milestone that we've been in for more recently, which has been a lot of fun, which is the like, okay, so it seems like wherever capital goes, really good things happen. So why don't we just kind of really take this thing everywhere? And by everywhere, I mean, let's think about new financing products you want to launch. Let's go to more countries. Let's, go on more platforms and think about more financing use cases. And that's really kind of where we are today.
That is super cool. And, it's funny, the good things happen where capital goes, I think is maybe like the tagline for the whole episode in a way, because as you said, and this has come up in some of our other conversations that Prashant and I have had, it's always the number one thing that small businesses say they need, right? It's like capital. I need capital fast. Like it's the lifeblood for small businesses. Totally. And I am really curious. You mentioned the embedded decision. And I remember this, observing Stripe from the outside and being like, ooh, that now things are getting interesting because, obviously you guys have a lot of businesses directly on your platform, but you work with a lot of platforms that then work with small businesses. And one of the things that Prashant and I have been talking a lot about in this series is just this question of like, how do you find every small business, right? Like there are so many, as big and well-known as Stripe is, and as effective as Stripe is like building a good reputation and attracting businesses from all these different verticals. You're never going to get to them all. You're never going to get into all the different places that small businesses are, nor necessarily would you want to. So can you give us a little insight into that decision to launch Stripe Capital for Platforms and sort of what the thinking was beyond just serving merchants directly on your platform?
Yeah, totally. I think the big spark for us to start going down this road is going back to that kind of like, I think we're onto something moment, is seeing that the product was resonating with small businesses, that it was driving real retention and value for them and for us as Stripe as a platform, and it was running, kind of driving real revenue profitably. It kind of got us thinking, wait a minute, like, could these same benefits apply in the embedded model where, you're a vertical SaaS platform and you're constantly asking yourself, hey, how do I build a deeper relationship with my users? How do I spin up new revenue lines? How do I make sure that I'm the place they think of when it comes to their most important needs? And so it was kind of like why should Stripe be the only one having all the fun sort of a moment where we said, what if we could partner with these kind of platforms that are, again, already on Stripe, where a lot of the same advantages that give us the ability to serve direct businesses still apply in the embedded model. And that was really the kind of like, let's take these benefits to more places sort of thing. And I want to talk about some of those advantages too, because I think it also makes clear like why we were able to move quickly on the platform opportunity, which is that, obviously as Stripe, we have, in partnership with the platforms for the embedded model, the ability to kind of reach these users. As you mentioned, Alex, it can be super hard, especially, with a large population of small businesses to have that distribution. Second, because we're the payment processor, right, for some of these platforms, we are sitting there seeing, valuable payments data, understanding how these businesses are growing, how their business is trending, how their payments are shaped. And we also are able to kind of sit in the funds flow when it comes to repayment, which is obviously helpful from a risk perspective. And so all three of those things were true in the direct business. They're also true in the embedded business. And so that extension ended up becoming very natural.
So Tanay, to that point, what are some of the things that were different? Because clearly the fundamentals of the model, the three pillars you laid out, translate very well from the direct business to the embedded business. Were there things that you had to do or challenges that you had to overcome to drive success in the embedded business?
Yeah, it's a really good question. I think there are a few things, and there are things that we both have worked on and are actively working on too. The first one is we paint with a broad brush when we say small business, obviously. Every industry is different. Geographies are different. The needs vary as well. And so one difference, is obviously when we partner with our platform partners, we really try and understand like, okay, what is the context of the businesses that are on your platform? For it to make this tangible, are they restaurants? Are they in the HVAC industry? Are they coffee shops? Because the way that you discuss their capital needs and understand them is going to be different depending on the industry. And of course, those vertical SaaS platforms, they understand their users very, very well. And when you couple that together with the kind of capital expertise that we bring, you can really think about those marketing education moments. And so I think that was one piece, is really how do we think about the right kind of product education moments for that user. I think a second one, which we're doing a lot of stuff cooking internally on right now, is how does the product actually need to be different, especially kind of more tailored to a particular industry or a particular group of users. So I'll give you an example, right? If you're a platform for professional services, right? So let's say, I don't know, you're doing consulting or advising, or maybe you work on a web development or something like that. You are probably like living and breathing invoices when it comes to your revenue, right? You're sending out an invoice, you're waiting for it. That is your atomic unit of revenue. And so, you actually may require a particular product that's tailored to how your revenue flows, and helps you finance that in a way that is especially relevant to you. And so, we're always getting in the weeds with our platform partners to understand what is the shape of financing that makes sense for your user base, and how can we help get you there. And then the final piece is, obviously with our direct businesses, we're able to kind of, access those users and directly market to them. With platforms, we have this, we obviously work with them to kind of launch capital. And so that kind of sales motion is a thing that we had to develop, right? How do we, we're kind of doing this kind of B2B2B model now, where how do we make sure that we get our story crisp for, okay, you're a vertical SaaS platform and you're thinking about 20 different things today, right? If you're a vertical SaaS platform for coffee shops, there's a long feature list you have. Like, how do we work with you to understand where financing demand lives on your platform, and how we can help you get this live as quickly and easily as possible?
Tanay, there's something that you said which was really, really interesting about a B2C small business versus a B2B small business. Now, I'm not sure you characterized it that way, but you gave the example of, I think, a restaurant or a coffee shop which has a card acceptance or a large number of small payment transactions happening. And versus the law firm or the web developer that's invoicing their clients and waiting to get paid. And we see this all the time, both from an underwriting perspective, but also how people think about making borrowing decisions.
Yes.
Because if I'm a coffee shop, I might think about, well, in how many months do I want to be able to pay back this loan or advance?
Yeah.
Okay, if I withhold 5%, 10% of my daily transactions, I can pay this back over 4 months. Great. It's a mental math that I do. But for an invoice-based business, which often is B2B, it's, do I think my customer is going to pay me back? And if so, over how much time will that particular customer pay me back? So I've invoiced Alex. I know he's good for the money, but he's always running a little late.
Right? True.
In this case, Alex, I don't know which way the invoices are going to go. But the point is that you issue the invoice, like it's net 60. I know I'll get paid in about 90 days. So then that lets me make an invoice financing decision, which is, so it's the mental mapping of funds coming in and how your business is working to how you might want to take on some kind of debt, because the more easy you can make that math and more natural, I think the better decisions people will ultimately make. Right.
Totally. I think that's exactly right. And it's even fun when you think about other business models too that have a similar kind of theme to what you're describing, right? So on Stripe, one that we see a lot of is subscription businesses, right? SaaS merchants who are kind of living and breathing, like if the side we've been talking about, the atomic unit is invoice. For these folks, the atomic unit is a subscriber. And what's especially interesting is, most people, we all probably do this, where we're given the option to do an annual subscription, but we all probably choose monthly because we want the optionality. And so what that means for that business is that they're kind of, thinking about the revenue billing cycle to billing cycle, and how many people are going to continue their subscription, what the kind of survival and churn rates are. And so this is a problem that, we've been thinking about a lot in terms of, like, how do you tailor a financing product that's really ergonomic to that business use case of, acquiring a subscriber, thinking about how long they're going to stay with you? Do you have to wait every single month for that person to pay you? Is there a way where financing could help you actually bridge or realize that revenue up front? I think this is where like the intersection between like business model awareness and financing helps you create some stuff that's really cool.
That's fascinating, actually, because I think sometimes we compare, and we've been having this conversation across all the episodes in this series, like traditional small business lending in a walk into a branch kind of sense. And it's interesting because on the one hand, I think the traditional community bank approach to small business lending, there was a relationship and a sort of intimacy and awareness of the small business owner and their business. But it also was more, I think, like the person and the relationship and less like an understanding of the map of your business and how it works, right? And in the Stripe model that you're describing, it's almost as if like through your platform and then through the platform partners that are built on or incorporating Stripe components, you have sort of a map of these merchants' businesses where you see where all these different touch points are. And I'm curious, you mentioned like this question of where is the best place for financing, right? And I'd be curious if you could give some examples of, for different types of merchants or different categories, kind of what the where is, because I feel like that's another thing with this embedded model that's really fascinating. It's almost this question of like, all right, the small business owner, your job is not to think about treasury management or financing or lending. Your job is to run your business. And in the course of running your business, where are you going to run into moments where you know you need capital? And instead of forcing them to step out of that moment and go, okay, capital means a loan. Now I need to think about the structure of the loan or whatever. How can you just put everything in that moment? Are there any things that jump to mind when you think about that where question?
Yeah, totally. Maybe I'll talk about it first on kind of almost like a user profile lens of like, what are the types of businesses where we think this need is resonating a lot? And what are the kind of common characteristics? Because I think that defines a lot of the kind of where and the when. I would say the most common attributes between businesses where we've seen our product resonate, both kind of directly and also with our platform partners, is, number one, smaller businesses where, Alex, as you said, like the amount of load that is going on that one solopreneur or that like, less than 10 employee person, like they are really looking for ways to make capital feel just so much more seamless, because the number of hours in the day are not going to support a complicated capital search where you have to walk into a bank branch, explain your business model, wait several weeks, hopefully not get denied. And so I think smaller businesses especially tends to resonate. And by the way, when you talk to a lot of those businesses, like their alternatives aren't great. Maybe they're putting it on their personal credit card or something like that. Like these things are pretty scary. The second is, I think naturally, if you're an IRL business, right, with an in-person presence, we've seen a lot more kind of uptick in adoption of capital because there's just so many like physical things and opportunities for you to put that capital to use, whether it's, hey, I need to buy more inventory. I need to think about, equipment to operate my business, or even in-person employees that are coming in and, manning a store or doing any kind of work. And then the third one that comes up all the time is seasonality, because both in the downswing and in the upswing, right. Obviously, you need some cash would be helpful to cover downswing. But even then, like on the upswing, there's so much of a capital need to make sure you can handle that load. I think about, as an tangible example of this, like, one business that I was looking at has taken multiple rounds of funding with us. And what's kind of cool is that like each round was kind of tailored to a different thing that was top of mind for them at the time. Their first loan was really around kind of cash flow management because they're in the lawn care industry and obviously like a highly seasonal business. And so they're kind of managing some of that downturn period. The second one was actually buying like a state-of-the-art mower that would just help them increase throughput, right, of the business. And then the third one was around kind of an ad campaign in a new neighborhood where they just wanted to kind of like drive a larger roster of clients. And so to me, it's like when those pieces come together, I think business owners can kind of like identify the right kind of where and when, especially with some of these common attributes.
I wonder whether entrepreneurs and small business owners that run in real life businesses appreciate a very frictionless online, always on experience, because during the day from 8 to 5 or 9 to 9, or depending on your business.
Yeah.
You've got to be at a restaurant, you've got to be in a store, and you've got customers in front of you who demand your attention all the time. And so your ability to take a few hours off from your day and go somewhere is just harder. But just as like we find it ourselves to be the case as in as working professionals, it's hard to get stuff done during the workday because you're slammed with work. I wonder if that's also a reason why IRL businesses appreciate this a little bit more.
I think that's such a good point, Prashant. And also, like, I don't think it's a coincidence that in almost every IRL industry you look at, there's a vertical SaaS platform that has absolutely crushed it, right? It's because, like you said, if you're running a barbershop and there are, clients walking in every few minutes and, there's equipment you have to get, you have to fix the chairs, like pulling out your phone and managing an appointment book, or even, for some of our partners like StyleSeat, et cetera, like being able to actually just get a capital loan is just, it's such a game changer given like the work environment you're in and kind of what you're used to.
Tanay, the other thing I wanted to ask you about, speaking of platforms, is just the process they go through to make these decisions about how they want to take on capital and how they want to integrate capital into their stacks. I mean, vertical SaaS is a great example. These platforms aren't trying to be everything to everyone, but they are trying to be everything to one segment of customers. And that's a lot of different capabilities, right? And the vertical SaaS platforms that I talk to, these platform providers, they have a roadmap of things they think they can build where they're going to be the experts. They have a roadmap that's kind of separate. That's like, here are the things we want to explore, dip our toes in the water of, maybe test out. And then here are the things that like maybe someday we'll get to, right? And so as I think about your relationship with these platform providers, I imagine you see a range of different interest in terms of like, we want to build this ourselves. We want to partner. We want to partner as like a core design partner and really work with you. We just want to flip this on and see if it works. How do you support those different kind of go-to-markets through platforms?
Yeah, totally. It's a really great question. And maybe what I'll do is I'll kind of talk about like the typical journey that a platform takes, starting from when they realize, hey, I think capital could be good, and kind of how they think about that decision tree. So I think a lot of, like with many of us when we're building products, the initial intuition comes from sitting down with the businesses on your platform. And the same way that Stripe did, hearing, loud and clear from them that capital is a really big use case. From then, they'll probably then, kind of go into that build by partner sort of decision matrix, Alex, you mentioned. And I think a lot of platforms quickly realize a couple of things. One, they realize that lending and financing is just not another feature that you can quickly add in to your platform. There is so much complexity and so much, honestly, subject matter expertise that goes into it, whether it is, kind of risk and underwriting and figuring out, what the offers should look like, who should be eligible, capital market structures, figuring out where the money is going to come from, thinking about legal and compliance implications. I think platforms very quickly realize, okay, this is like a pretty complicated set of questions. And they also do feel a little bit separate from the core things I wake up every single day and think about. Like if I'm that coffee shop platform, I'm waking up every day thinking about how I can get that coffee shop owner to have the right experience, the right feature set. And while capital is a part of that, some of these other questions seem like building blocks that are kind of complicated to think about. And third, there's, as with everyone, there's a long list of stuff that you want to get to. And some problems are just more core than others, especially related to kind of the user experience you have. And so I think this is a big reason why a lot of platforms find themselves in the partner sort of angle in that decision matrix, because I think the build one is, and rightfully so, is quite intimidating. There's also, by the way, like, other issues they might encounter if they go down the build path for a long time, which is, hey, for example, if all of my businesses are in the same industry, there may be some kind of concentration risk there that exists, or even from a capital market structure, it may be really dependent on the specific financials of my company and not just how the portfolio is performing. And so for this reason, kind of going back to the initial question of how do we get platforms the ability to get started with capital so they can scratch that itch, but do it in a lightweight way? Like, this is the question we've been asking ourselves as we spent more and more time with platforms. As an example of something that we built, we're really excited about. Earlier this year, we announced, and it's now live for eligible platforms in the US, they can actually go live with Stripe Capital entirely self-serve in their Stripe dashboard with just a couple of clicks. And they can see, the offers their users have eligible. They can see the emails and kind of what those financing path looks like. And they can even sign a partnership agreement and then just click a button, and then Stripe delivers those offers to those businesses. And
that's amazing.
It is really the definition of, let's take stuff that is just an unbelievable amount of complexity and boil it down to just a simple and transparent experience for platforms. And to kind of the thrust of your question, the reason we built it this way is because we knew that a few things are true at the same time. Platforms really want to try capital. It's really hard to build this thing. It's hard to get this to the top of your priority set, given all that you have going on, but you just want to get started. And I think when you put those pieces together, that's why we really kind of started to lean into this value proposition. And of course, platforms can do a more kind of embedded, involved experience as well, but that's really where we've seen the kind of market momentum go towards.
So Tanay, you've talked a lot about the build versus partner decision that a platform, vertical or horizontal, might go through. Now, as Stripe yourself, as a technology platform, how do you think about building capabilities on your stack versus partnering with other players, players like Fundbox, and how does that strategy, if you will, that thinking permeate into capital?
Yeah. So first, philosophically, I'll just say that we can't operate at Stripe scale without being super deeply committed to partnerships. And so partnerships and product are just very much go hand in hand, which I think is super exciting across the board at Stripe. For capital specifically, I think here's how we thought about it. Initially, when we were getting started with capital, we had enough conviction that this was both strategically valuable to Stripe, something we had inherent advantages to doing, and something we were seeing strong early signs and momentum for, that it made sense to really get started in-house and have kind of a lot of those capabilities live within the Stripe universe. And by the way, there's a lot of great advantages to that as well, right? The product is able to feel very consistent relative to other Stripe products because you have those PMs and those engineers sitting next to each other. On the credit risk side, we're able to plug in how we think about capital credit risk with how we think about risk on the payment side, all those other businesses. And so I think that given how strategic it was for us, we kind of went down the build direction. Now, as we scale, I think what's also really interesting is, well, what are areas where we can bring in strategic partnerships, and should we have to do everything ourselves every single place that we go? And I think one place that has been especially exciting to kind of think about this has been international expansion. As you both know well, lending and financing has a lot of nuances on a per country basis, right? Some countries will have requirements around how they think about credit brokering, or how they think about safeguarding funds, or various other laws that relate to lending and financing, or the risk profile may actually also be different because a particular country has a concentration in industry or whatever that is. In addition, capital market structures may look entirely different. You can't just copy paste the stuff you do in one place versus the other. And so I think something that has been exciting to help us accelerate our pace of international expansion has been, talking through the right kind of strategic partnerships that help us just grow a lot faster on that vector.
Yeah, I would absolutely add to that, when you're expanding into new areas, and lending's the perfect example for this, you always have to be really, I feel like, kind of appropriately nervous about the things you don't know, right? Yeah. And so leaning on partners in those areas, I think, makes a lot of sense. I also wanted to ask about sort of how the product, and you kind of described it as these milestone moments right at the beginning of our conversation. Obviously moving to Stripe Capital for Platforms, huge milestone moment and sort of inflection in that journey. The third one you mentioned about continuing to kind of expand. Obviously, we just talked a little bit about geography. I also want to talk about product expansion, right? Because the other thing that Prashant and I have spent a long time, both in this series and outside of it, talking about is the idea that much in the same way that small businesses are all very different from each other, and they're just very heterogeneous and very different segments and different sizes, and they just make them very, very different businesses to serve. I think that's also true on the product side in terms of the right product fit for different small businesses at different times, right? Sometimes you want a cash advance against future payment inflows. Sometimes you want to be able to sort of get financing based on invoices that are outstanding. Sometimes you want to get a loan for some capital improvement project that you're doing, whether it's buying equipment or real estate or what have you. I mean, small businesses have such a diversity of different capital needs. How do you think about supporting kind of the breadth of those different product needs and sort of how the product structure and the terms and everything need to change to support that?
Yeah, totally. So maybe I'll first talk about like our flagship product that we have today, and then talk about some kind of expansion areas. So our flagship product, is called a Flex Loan, and basically, a user is underwritten automatically based on, again, the payments volume that we're seeing from their business, as well as other kind of data sources that we can work with that user to ingest or the platform to ingest. And we surface an offer to them, and they can select basically as small as $1,000 up to the offer size that they have. And this is basically a loan that's repaid generally over around a 9-month period. And repayment happens kind of automatically through sales that they process on Stripe. And so we're able to kind of withhold. And then, of course, there's a minimum amount that they're meeting as well. This is a good structure for some financing use cases, and the product has been really popular for those. And for example, one thing that comes to mind is there was a real estate photography business, and they really wanted to just have the ability to be less reactive to the stuff that was happening in their business, whether it's a piece of equipment breaking or an employee calling out sick. And so having the ability to invest in some of those things up front and have some of that cash buffer is very useful. But it's not the most ergonomic for every financing use case and every kind of business. And so from a product expansion perspective, there's kind of two themes that I can talk about with a lot of the stuff kind of coming soon. The first theme is thinking about different value props of financing. So a lot of users tell us today that the main value prop and like the thing they care about the most is really the size of the offer. Hey, can you give me more money because more money equals more useful? However, from other cohorts of users, we don't hear that same need. We actually hear them value predictability more, right? They say to us, okay, I may not need as much upfront. And what I actually value as a business is just knowing that there's going to be an amount that's available to me for a longer period of time. And so we're thinking a lot about products that are able to accommodate for those wider variety of kind of value props. And then the second one, we talked about this a little before too, but is just like more kind of business model related product expansion. Because I do really believe that the way you think about your revenue really dictates the way that whether or not a financing product makes sense for you, right? I mean, Prashant, you mentioned this earlier, but like if a business is thinking in invoices, it's hard to really estimate exactly what you might need at that moment. Or if a business is thinking in terms of its subscriber base, it's hard to like really do the mental load of forecasting how much money you think you might need. And you're probably looking for financing to more reflect the way that your business actually operates. And so that's another big priority we have on the product expansion side. There's some super exciting stuff coming soon that I can't wait to talk more about externally.
So Tanay, as a fellow or maybe former product manager, one of the things that I'm sure is fun is building product at Stripe, because you're inheriting some of the scale and the platform and all of that good stuff that Stripe brings. And I'm sure that's like a real asset as you think through new products and build them. At the same time, what are some of the challenges of having to build product at Stripe? Because again, Stripe's in a somewhat unique position. What are things where that maybe make things more difficult on a day-to-day basis?
Yeah, this is a really good question. Maybe I'll talk about one kind of generally with product, and then I'll talk about one challenge for capital specifically. I think generally, a common thing I hear from platforms, which I think is also something that, as PMs, we can sometimes feel is there's a lot going on in the world of Stripe. And platforms sometimes, or users come to us sometimes and say, hey, like, help me think about what my prioritization and sequencing should be. Like, should I be talking to you, Stripe, about this local payment method that's taking off? Should I be talking to you about stablecoin? Should I be talking to you about capital or issuing? There's so much happening in this space, and Stripe is like such a proactive company with a lot of stuff going on that I think one challenge can just be, making sure that we are talking about and sequencing products in the way that makes the most sense for the user. And this is definitely something that we're, working on a lot internally. I mean, going back to the earlier topic we discussed around where does capital resonate a lot with in those segments, we're trying to, on the capital side, make sure that, hey, when we see a platform that has some of those attributes we discussed, they have IRL businesses, they have seasonal, those businesses have a lot of seasonality, like we should be talking to that user about capital because we know that shape of platform gets, such value out of the product. On the capital side specifically, I think a challenge, especially in the earlier days, is that capital requires a lot of subject matter expertise, and it is and has differently shaped problems, right, than other areas of fintech. I mean, capital risk is different than other kinds of risk. Capital markets motion for financing products is different than other forms of treasury and capital markets. Even the data science problems can be different. And so in the early days, we really heavily prioritized, but of course this was a challenge and it was hard, getting people who had those kinds of domain expertise into Stripe and helping us kind of build this. I think today we've gotten to a really great place. We have folks who have worked on all aspects of lending and financing from major banks to other fintechs, and that's been really great. But that was definitely kind of like this was new for Stripe, and we had to get that corpus of knowledge together, especially in the early days.
Yeah, lending is a learning business, as I like to say, and there's always like a lot of learning that comes in being it. It's funny when you talk to folks when they're starting that journey versus you fast forward like 5 years, 10 years in, their perspective on it just totally changes because it's something you have to a degree, experience, I think. And so it's been fun to watch your guys' evolution in this space. The follow-up question on the building at Stripe front that I think is very relevant to this moment in time is obviously everything AI oriented. And I would say Stripe is among the companies I see moving the fastest and being sort of the most aggressive about trying to build towards where this future is going. However, as you just outlined, capital is different, lending is different, regulations around all these things are different. Where do you see AI kind of providing a lift or potentially changing the trajectory of what you guys are trying to build in Stripe Capital?
Yeah, it's a really great question, and it's hard to go more than an hour these days without thinking about AI. Given
we made it
all
so
that's happening.
far,
Yeah,
we really did.
Absolutely, no, I couldn't agree more. I think that there's a couple of vectors of growth that I think are and product differentiation that I think the kind of current wave of AI and LLMs are going to unlock. One that I'm especially excited about is, and I think this piggybacks really nicely off our conversation around how capital resonates with users, is making lending feel more contextual, especially from a business perspective. So maybe I'll just walk through an example because it might be easier. Let's go back to that subscription idea, right? Like maybe I have a fitness app, and I have monthly subscribers who come to my fitness app. And today, maybe I'll get a financing offer, and I got to do that kind of mental math of exactly, hey, so where are my subscribers coming in, and kind of how are they paying down over time? And what if, used, kind of with the use of LLMs, we can really just help that business contextually understand, hey, so this is kind of the trajectory of how you acquire subscribers today. Here's what their churn rates typically look like. By the way, here's how your cash flow tends to trend over that month because you spend this amount of money on marketing and user acquisition, you spend this amount of money on your hosting costs. It looks like there might actually be a little bit of a cash flow gap during this time, given what we understand about your business. So here are the ways that financing can be really helpful to you. Breaking down that explanation, I think before the current wave of AI, was just hard to do accurately on a per business level. But I think that there is a lot of opportunity to help our products feel more relevant using AI. One stat that I really like from the surveys that we send out from users is that actually a majority of businesses we talk to for Stripe Capital tell us that the fact that they saw an offer actually helped inspire a sense of demand from them in terms of what they would use the money for. So it's kind of like when I knew that this financing was available, it actually gave me an idea for something that I could put that money towards. And this
dream
is really
bigger once you see that thing. That's interesting.
Exactly. And I think this is really where the current wave of products can be especially helpful, is that we can scale some of that explanation, that education, that inspiration for businesses in a way that feels really cool. And then maybe one other thing I'll talk about is, obviously underwriting is on kind of a spectrum between like manual and automated, right? You basically have models that you built that will kind of score businesses based on a variety of factors. And then, of course, you have, at some stages, you have manual reviews where a human being will take a look at both data as well as bank statements and financial statements. What's exciting to me is that I think in the current wave, we'll reach a point where we don't really have to choose between those two. And LLMs can help us just accelerate the pace of bringing those together. And so kind of like a thought provocation we've had is, hey, so what if in addition to all of the model scoring and stuff we've been doing, we had the power of a manual reviewer, right? Looking at every single application in the form of an agent that is consolidating information in a very helpful way, pointing out anomalies or flags or things that we want to take a look at. And of course, a human can then take those forward as needed. But I think that we're able to challenge kind of the preconceived notions and the buckets we used to sort underwriting into, because I think AI is just bringing a lot of that stuff together.
It's so interesting you said that, because we were talking with Rich Franks, who is the head of credit at Plaid, and who previously used to be responsible for credit strategy at PayPal. And he said something very similar, which is using LLMs to be able to identify, call them anomalies or call them places where your traditional, I'm going to use the word traditional, machine learning model, logistic regression, gradient boost, whatever it is, might not adequately be sloping risk. So,
yes,
what is the orthogonality in the underwriting that you can get by deploying an LLM to be able to identify those things? It's definitely a space
totally.
that we're very, very excited about. Also, things like just categorizing and unstructured data, a descriptor on every payment, right? Which
exactly.
which can be much more easily categorized and classified based on these LLMs.
Yeah, it's really fascinating. I mean, I also like the idea that you sort of outlined about the context, right? And this is something we also talked about with Rich a little bit, but this idea that, and I'm thinking again in the context of these platforms, right? Like the capital's the number one need these businesses have. And in a lot of ways, and I think this is almost, it ties us back to the community banking angle a little bit as well. Like the nice thing about walking into a bank was you could sit down with a loan officer and they could kind of give you that context on your own business, right?
Exactly.
When you output that, or when you take someone out of the branch and you put them in these vertical software platforms, they're great and they're like amazingly more convenient for running your business, which is great, especially for these in-person businesses where you can't take a day off to go walk into a bank. But it does lack that context and that like advisor that's sort of sitting in the platform. So it sounds like, and maybe we can wrap up here tonight because you've been very generous with your time, that capital in some senses is kind of like the tip of the spear for a larger conversation that you can have with small business owners about their business and where it's going. So like when you kind of think about it in those broad terms, any thoughts on like where this is going or kind of what this is going to evolve into? Because it feels like we're still very early. I know that's kind of a cliche in fintech, but it feels like we're a little early still in seeing where this move towards embedded, more contextual experiences going for small businesses.
Totally. Just a few thoughts on this. I think number one, I don't think that embedded lending is going to slow down anytime soon, because I think we're seeing, to your point, Alex, so much benefits of kind of context and bringing financing to surfaces that small businesses are already using, and surfaces that are understanding them more and more every single day. That I think, the cat is out of the bag in a way, and I think that there's going to be a push for kind of financing and lending to make itself into more and more of these surfaces that businesses are on every single day. The second thing that I think about a lot is that a lot of products and services flow with money, right? Like money is kind of the top of the waterfall because then you spend it and deploy it in different ways. And so in many ways, capital is actually the top of a product waterfall, where once you have kind of enabled access to capital, then you get into really interesting questions of where that capital goes. Like, hey, so you've given a small business on a platform, access to funding. Can you now help them invest those funds so that they can get a higher return? Can you help them deploy that capital into a piece of equipment or into inventory that can help them see a higher ROI? Can you help them use that money to actually go out and actually expand their workforce? Like, to me, I think that a reason why, the same reason that SMBs talk so much about their capital need, is the same driver for why capital is actually like you said, it's the tip of the spear for then driving kind of financial services adoption across like a bunch of different vectors. And so as we see a larger and larger percentage of small businesses get financing from all of these kind of alternative options, I think it's really just going to be kind of step one of a really long journey.
That is so interesting. I love the idea of like, hey, I need capital because I'm going to buy, going back to your example, like this really great lawnmower that's going to make me more efficient. Well, like, a natural follow-up question that you might want to get help with if you're a small business owner is like, I know that I need a better lawnmower.
Yeah.
Which one do I need?
Which
and
one
like,
do I get?
what choice do I make? And how do I make sure I'm deploying that capital in a way that's best? Which, by the way, if I can help you with those downstream decisions, that improves the odds that it's going to work and that you're going to be able to pay me back. So like everyone's interests are aligned all the way through, which is pretty cool.
I totally agree. And I think the interest alignment is something that excites me the most about Capital, honestly, is, I mentioned at the start that we started Capital because businesses told us that this was the number one thing that was kind of preventing them from growing. And so we've kind of taken it upon ourselves to try and rigorously measure, hey, are people using these funds for things that are then growing their business? And we've actually run kind of randomized controlled trials where we've compared, kind of a treatment group of businesses who has access to capital offers to a control group. And we have seen statistically significant uplifts in revenue and PV growth. And so to your point, Alex, like, yeah, businesses are buying those lawnmowers that are helping them increase throughput. They're hiring employees, they're managing cash flow gaps, and they're kind of seeing that revenue grow over time. And so it really is just kind of like step one is get the capital. And step two is then, I think, really help make sure that that's goes to, the good use for that business and helps them kind of grow over time.
Yeah, I just love that framing of value alignment and incentive alignment between the small business owner who succeeds when they are getting capital in a way that's easy and convenient and contextual and all of that. Any kind of platform which is benefiting from healthier businesses that are maybe moving up a subscription tier or buying and selling more on a commerce platform, all of that good stuff. And then, of course, the capital provider who is also benefiting from the distribution, the data, the selection, and all of that. So if you can kind of make that work right at scale in the small business economy, I think that's a jolly good thing and
super exciting.
That's exciting and aspirational for us to keep chugging away. Tanay, thank you so much for joining us. We really appreciate you sharing sort of your experience at Stripe Capital, your insights into embedded capital and building product at Stripe. Thank you so much.
Thank you to both of you. It was a really great chat.
Appreciate it.